It's all about risk. I've seen many traders go win, 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 and then they think they're better than the rest of the market, which they probably are by winning trade after trade, but then they're wiped out and fully liquidated and they're zero. And that's all just handling risk. Anything can happen in these markets. I had a floor model too, I had a floor model when that broke. I know technically, in my view, it didn't break. I'll just tell you that it didn't break. Like, the model only works during a bull market, and when that breaks, it's early signs of a bearish market. And it broke when $50,000 broke, and then we cascaded down. And we're not actually in a bull market right now. We're setting up for a bull market because that model's not crossed over into a floor that will hold yet. With these new derivative instruments, like, man, what did we crashed from 6,000 to 3,000 back in tail end of 2018, right? That's the power of derivatives. It was like 48 hours and a $3,000 50% drop. And that's going to break any model. Like my models work off on chain and fundamental spot demand. And you kind of think of that as like what the price will mean revert around. Like, if you can build a model around demand and supply on chain, that's where the long-term investors want to value it. And when it drops lower, then eventually they come in and they buy it up. And and it gets too high, maybe they'll sell some. But everything else is a random walk of, it used to be liquidations of retail on BitMEX. Now it's liquidation of retail on Binance, and it's just crazy whipsawing, and there's no sense to the market other than this game of traders using huge leverage to take the other guys out, until you get too far. You get too far out of that, then the fundamentals do come in and people will spot buy and FOMO in, like we did recently, when we had that latest pullback below 40, even 42 on some exchanges. Retail bought that, really. They went and bought it spot. You could see that on chain. So the models work. They work, but any kind of price target, it's risky business. And timing, like you say, the stuff is very much, no one can predict price and time. If you do it, you're lucky. If you do it consistently well, then you're probably a whale making sure that your bet wins, which you do in options market, right? We know that. We know that. I'm betting on this strike price. Let's make that happen. And then I get my cash out, and then I'll let it go find its norm again. So going back to this whole time and price, which everyone on Twitter seems obsessed with. I get on a lot of shows and they say this price target, that price target, and it's like, no, I just gave a model, and that's what the model spits out on the upper bound if we top out at this random date. It doesn't matter for an investor. You don't really want to know time and date. That's kind of like the noob coming in going, when it hits this price, I'm going to sell.
And they don't.
Because you're wrapped up in emotion. And what you need to know, what's much more valuable is, are we currently in an area of strength? Yes, good. Buy more. Is it softening? Okay. Take that into consideration when I have to rebalance. Maybe I'm going to consider my risk. Everything is about adjusting your risk exposure. So yes, we're in a strong market. Then we can allocate more. We may even add some leverage, small amount of leverage. I always say, if you're going to add leverage, then unless really know what you're doing and doing 3x, 10x, I'm going, you want to handle any kind of pullback of even 50, 60% with your leverage. It means it's way low leverage.
1x, 2x.
Yeah. It's all risk. It's all about risk. I've seen many traders go win, 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 and then they think they're better than the rest of the market, which they probably are by winning trade after trade, but then they're wiped out and fully liquidated and they're zero. And that's all just handling risk. And so that's what these models are really best used for. Is like we're in an area where you can go risk on because it's strong. Here is risk off, and then take some money off the table, reallocate. I mean, I'm even I know we hate and we shit on fiat, but I still have a 10% bucket in cash at all times.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Obviously, we've seen some price drop. Do you still think that the bull run is largely intact?
Yeah, I think it's structurally still intact. December was, I'm told it was going to be soft from the institutional money. They want to cash out and book their profits, and a lot of the guys that want to redeploy, I'm hearing that that's kind of a January story. So, and also we've got the tax sell-off kind of regime right now. So these sort of news and narrative fundamentally weak for December. But, if we're looking over the next 6 months, structurally it's pretty strong. And what gives me confidence about that is that there's really a lot of coins that have been moved to long-term holders who have held their coins for 5 months or more. And so they're at maximum accumulation. They're slowly divesting as they do, as the price runs up and they take some profits. But predominantly the coins are with the long-term holders, and bear markets don't usually start until the long-term holders are divested, and they're now in the short-term holder sort of category where those weak hands are much more prone to dumping or selling out. And the last sort of crash we had from the low 60s to eventually the 29,000 was when those long-term holders had completely exhausted. And we're currently pretty charged up with those guys holding onto their coins. So depending on how quickly they divest, I think we've got anything from 3 to 6 months of a run, maybe longer, just have to see.
It's not an exit from Bitcoin. It's not an exit from the market. It's not disinterest in crypto. It's just an opportunity for them to make a whole lot of money, right? They see an opportunity to sell at a high, and they're the same ones rebuying and reinvigorating the new bull market.
Exactly. And we're not really tracking individual participants in that kind of model. So I see it as like different waves of people coming in. They come in, they hold, they wait for the rally, they take their profits. And, if you go back and you look at 5 months from now, that was really in the $30,000 range after it dumped. And those guys, held up to now, and they're divesting and taking their profits. And it was very similar the last sort of 5 months. So these alternating cycles where new people come in, they get the run, they sell, and then people buy into the rallies, and they experience the dump sometimes, and then they get their turn. But in this case, there's other data that I'm looking at that's it's showing. It's the guys that dumped at the 60,000 when we went down to 29 back in May. They were like these kind of people that were accumulating, and then they completely dumped out. And now with more of the forensics metrics, the supply shocks, where we can actually see the different categories of holders, a whole lot of strong-handed accumulators were lost, and then they sort of popped up in the speculative swing trade metrics. So I think what's happened is a lot of the smart, well-backed money, whether they're hedge funds or family offices, did buy the $10,000 range and into 20,000, sold at the 60, and then they reaccumulated as it was coming down from the 40s to the 30s. So we've got a lot of seems like sophisticated swing traders now that are playing the market. So it's looking quite different from what we saw in 2017 and the cycles before. It's quite interesting, this whole cycle. Never seen anything like this before.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is gunr and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.